It's a question that drives a lot of people crazy. Why does it seem like the rich just get richer no matter what? It's this constant, kind of painful thing we see all the time. But what if I told you it's not really about luck or even just working harder? What if it all comes down to the system you're playing in? Yeah, let's get into that.
So this quote, this really hits the nail on the head. It's basically saying there are two completely different games being played out there with money. And each game has its own, totally separate rulebook. Figuring out which rulebook you're using, well, that's the key to understanding where all the wealth is actually going. And that really brings us to the big question for you. Which set of rules are you playing by? I mean, really think about it, because your answer determines pretty much everything, whether you're on a path to just staying afloat or if you're on a path to actually building real wealth. So, today, we're going to break down the three big systems that draw the line between those two paths.
All right, let's jump into system number one, the core mechanism. This is the bedrock, the absolute foundation of it all. It boils down to a super simple question. What do you do with your money? Do you use it to buy stuff, or do you use it to buy, well, more money? That one little difference changes absolutely everything.
Okay, so here they are, side by side. You got Rulebook A, the debt cycle. That's kind of the default setting for most of us. And then you've got Rulebook B, the asset cycle. Now, they might look like just two different ways of doing things, but trust me, they lead to completely different universes financially. Let's dig into the one that keeps so many people stuck, just running on a treadmill. So the debt cycle, it all kicks off when you buy liabilities. And what's a liability? It's just something that goes down in value. The classic example is a brand new car, right? You finance it and it loses a chunk of its value the second your tires hit the street. Every single month, part of your paycheck is just gone. It's paying interest. And here's the kicker. That interest payment is literally your wealth flowing away from you and into someone else's pocket, like the banks. Your money is out there making them richer, not you, and that's why your net worth just stays stuck.
Okay, now let's flip that completely on its head and look at the rich cycle. This is where it gets interesting. Here, debt isn't for buying liabilities, it's used as a tool, as leverage to buy assets, things that actually make you money. So instead of that car, imagine you use a loan to buy a small rental property. Now the rent you collect from a tenant pays your mortgage and maybe even puts a little cash in your pocket each month. See what just happened? That property is now an employee, working for you 24/7. And this is how the upward spiral begins. That extra cash plus the equity you're building can become the down payment for the next property, and then the next. Suddenly, your money is making more money. It's compounding, and it's a beautiful thing.
All right, moving on to System 2, and this one is just as huge, the tax code divide. You've probably heard the saying, it's not what you make, it's what you keep, right? Well, this is where that gets real. Because how you earn your money fundamentally changes how much of it you actually get to hold on to. The rulebooks here are, again, totally different. And this table really lays it all out. On one side, you've got earned income. That's what most people have, a paycheck from a job. You trade your time for money, and guess what? It gets taxed at the highest possible rates. You get your paycheck, and boom, the tax is already gone. Now look at the other side. That's capital or passive income. This is money that comes from your assets, things like stocks, real estate, you name it. And this income, well, it's taxed at a much lower rate. Plus, there are all these deductions and ways to delay paying taxes. It's a completely different game that lets you keep way more of your money to put back to work.
I mean, just look at this chart. It makes it so obvious. That gap between the tax on your paycheck and the tax on income from assets, it's huge. And that difference, when it compounds year after year after year, it's like pouring gasoline on the fire of that financial divide. It's one of the most powerful engines in this whole system, and honestly, most people have no idea it's even there.
Okay, last but definitely not least, let's talk about the software that's running in the background of all this, your mindset. This is System 3, and it's all about psychology and your relationship with time. Because all those financial habits we just talked about, they don't just happen randomly. They're powered by a way of thinking that's been wired into us.
So first, you have the consumer mentality. And look, this often comes from a place of scarcity. When you're worried about next month's bills, your brain is hardwired to focus on the short term, right? On what you need right now. And that short-term thinking is what fuels that debt cycle. It's all about that instant gratification. Looking rich today rather than putting in the work to be rich tomorrow. And of course, it makes you terrified of taking risks because losing even a little bit feels like a disaster.
But then you have the owner mentality. This is a total 180. It's all about playing the long game.
It's a massive shift in how you see the world, from just consuming things to actually owning the things that produce value. It's about seeing opportunity everywhere, not just a tiny pie that everyone's fighting over. The core question changes from how can I afford to buy that to how can I build something that will buy that for me? And the secret ingredient that makes this all work is something called compounding patience.
And we really need to pause on this one because it is so important. Compounding patience. It's the deep down gut level understanding that building real wealth is a slowly then all at once kind of thing. It's having the ironclad discipline to just stay the course, to let time do most of the heavy lifting for you, and, this is the hard part, not freaking out and selling everything when the market gets a little shaky. It is the absolute psychological engine of the asset cycle.
So, let's tie this all together. What's the big picture here? We've walked through 3 huge interconnected systems: the asset cycle, the tax code, and the owner's mindset. And when they work together, they act like a massive wealth accelerator, but only for the people who understand how to use them.
Now, after hearing all this, it's really easy to get hung up on whether the system is fair or not. I get it. But the real power in this information, the big takeaway, it isn't about trying to change all those external rules.
It's about learning the rules well enough so you can change which system you operate in. By really understanding these cycles, the way taxes work, and shifting your mindset, you can actually start to move. You can transition from being stuck in the debt and labor game to playing in the asset and capital game. And that choice, right there, that's the first and without a doubt, the most powerful step you can take onto a completely different financial path.